in terms of the trades I take right now, I'll take my profit, and then I will find the coins that I think will do well over the run. And it's not necessarily meme coins or anything like this. I'm looking more at utility. And right now, I think AI in crypto isn't fantastic. I think a lot of it is just a scam, or they've got some database that they're calling AI, or they ask ChatGPT occasionally so they can put a sticker on AI, right? But GameFi, on the other side, is massive, right? Obviously, there's the we made Pac-Man with crypto and buy this coin, and obviously that's trash. That's never going to evolve and grow and scale. But there's other projects such as like Gala Games or something like that, right? Where they are a game studio. They're looking to scale and evolve with the industry, not just crypto, but gaming in general, right? So when you've got projects like that, as an investor or a kind of angel investor perspective, right, you're going to look at that and say, okay, well, yeah, I'm going to put my money there. So when I do make a profitable trade, I'm just pouring money into projects that I do really think will grow with the market. And anything that I don't see lasting more than 3 or 4 years, I don't touch generally.
Hi, everyone. We have an esteemed guest today. Hamilton, can you introduce yourself?
Hi, my name's Hamilton. I have been trading for probably 8 years now. Before that, I was a professional poker player, and I was also working for a game studio as well throughout that time. So yeah, I've been trading quite a long time. Happy to get into this. And yeah, I like your channel. I like a lot of the people you interview.
Thank
I think
you.
they're very interesting.
Yeah, we try to get like the very different perspectives. So about you, like, how did you get into crypto? How did you get interested into the space?
So before crypto, I was working in esports at a game studio in China, and I met this guy. I think of him kind of like as a mentor. He made a lot of his money in real estate and trading, forex, and traditional finance. So he taught me quite a lot about the trading side of things, TA, stuff like that, RSI, all of that good stuff, but also about risk reward and managing your emotions. And I had a little bit of that from poker, of course, as well. It's very, very similar, poker and trading. And a lot of professional poker players do end up becoming traders because of the risk reward, not tilting, not revenge trading. All of this stuff is all very similar and runs in parallel to how a professional poker player would kind of navigate, right? So I kind of took all of that and really dove in to trading, originally with forex and a little bit of stocks, and then a friend of mine introduced me to crypto, and I had heard about crypto before, and I had actually mined a Bitcoin back in probably 2014, 2016, something like that, when I was super young, probably like 15 or something like that, right? And yeah, I mean, obviously lost access to that computer, but I always had it in my mind like, all right, well, Bitcoin is a thing. I know what it is. I just never had the capital to get into it, right? So when I got into trading and I felt confident, I then revisited the crypto markets. This is probably 2017, 2018, the 20K run, right? And from that point, I realized that, okay, the crypto markets are a lot easier to trade than traditional markets, right? Way more predictable. I mean, you're literally just staring at triangles and going, okay, we're breaking our resistance, it's going up, right? Whereas the traditional markets are a lot more complicated. So I dove into that, and then I dove into the blockchain as well. And I've got a lot of OG friends that are from kind of 2012, 2014, the original miners. So they taught me a lot about the blockchain as well. I'm still in contact with them, so I get a lot of good data from them as well. And yeah, I would just say that I've just been grinding this and fell down the rabbit hole, and I've been loving it ever since. And this is what I do. I love trading. I love analyzing, and I love the whole aspect of beating the casino in a sense, right?
Perfect. So you mentioned you get some data from people working on chain, basically, right? Or this is what I understood. So is this, what kind of data is it? Is it like inflows or something to do with the updates on the networks? Like we hear about all these major updates in the blockchains. Is this what you were talking about?
So inflows are good, but I would say the main things you want to be looking at is what the miners are doing, right? So if the miners are spending more, and I do have a thing on my channel that I think it's average energy consumption cost or something like this, right? It's a chart I look at, and that is directly correlated with Bitcoin. And it's basically how much the miners are spending on what they're doing, right? And if they're spending more, then it means they predict, and obviously they're in tandem with the market makers, so that they're going to know roughly where the price is going to be, right? And they're going to predict where the price is going to be, and then they're going to essentially mine with more power to get to that price and manage their profit, right? So you've got that, and then you've got hash ribbons, which is another indicator I use, which is essentially just moving averages of raw hash rate. And if you don't understand what that means, it's essentially just the power that goes into the computing of mining the blocks for Bitcoin, right? And I know a lot of beginners in the space will be like, what the hell is that, right? It doesn't really matter. It's like, how much effort are the miners putting in, right? If the miners are putting in a lot of effort, then you can expect price to correlate with that pretty significantly, right? Pretty much in parallel. And that's the main couple for Bitcoin, I would say. Check out things like Glassnode, stuff like that. Friend of mine, Willy Woo, he's really, really good on chain. So I definitely recommend following him. And yeah, essentially, well, hash rate, for example, I can show you here and share my screen if you'd like. Okay, yeah. So hash rate, for example, is this. This is what I have on most of my long term. This doesn't really matter short term, I would say, but something like this is massive when it comes to looking at Bitcoin and the macro. It's probably the best performing indicator in crypto right now in terms of the long term. So if you are an investor, if you've got, say, over 100K to over between 100K and a mil, right? And you're looking to get into Bitcoin, don't go on 100x long Bitcoin. Okay, you're going to lose it all. Don't even 10x long with that much, unless you really, really know what you're doing. You've been trading a long time. But yeah, if you're looking to just invest and get that 30% or something like 100%, 200%, 300%, wherever Bitcoin gets to, I believe Bitcoin gets to probably around 200K this run. Based on a few things, but the main point here being hash rate, right? Hash rate, when these moving averages cross towards the upside, and again, this is a free indicator. You can find it on my profile, or you can find it on the indicator section, right? Just type in hash rate here, right? And yeah, when these cross towards the upside, it's usually a fantastic long signal when in a bull market, right? Or when we've hit the market lows, like something like this, right? So we've got a linear regressional growth curve, which is essentially the rainbow chart that everyone talks about, right? When we've hit these lows and we get a long signal, then you can really, really just find some beautiful, beautiful trades. Obviously, in a bear market, it's going to be a little bit different. But once we've hit these low points and we get this cross on hash rate, it's literally free money, right? This here is in terms of a percentage trade, right? We're looking at 160%, no problem, right? So if you're putting 500K, you've made a pretty decent bank. And again, bear market here. And then, yeah, once we hit those lows, we get a signal here, boom. And then you're going to get probably less on this one, maybe what, 15%, something like that. 45%, pretty decent. Okay. And then again, the most recent signal we had that just ended around 60K. Yeah, 100% trade there. So yeah, this is probably one of the best investment indicators. And this is what I use for just really judging the macro. If I'm doing day-to-day swings or week-to-week swings, right, it's good. It's important to look at this and say, okay, right, these are crossed towards the downside. Maybe don't long with that much, or maybe lower my stop loss or whatever, depending on how this looks, right? Right now it is in the red. We are mid bull market, so I'm not super bearish, but yeah, a bit of a cooling off period. Sideways kind of echoes that as well. And then when these cross towards the upside again, which I predict will probably be around 80K, somewhere around here, right? That would be the time to essentially enter again. Again, not financial advice. You have to know what you're doing and manage your risk and know about the structure, right? And you can check out my channel for that as well, right? But yeah, 80K is really the area to look for if you are an investor, and really do get hash rate and look at some of these indicators that do look at the blockchain, because that's really what matters when it comes to Bitcoin. And Bitcoin is the mothership of all crypto, right? So if you are an altcoin guy or a meme coin guy, a lot of these other coins, most of these other coins will be coupled to Bitcoin, right? The mothership will decide where we go. If Bitcoin crashes, everything else will go as well. So yeah, that's what I would say there.
So basically, like to summarize it, TLDR, I think is like basically the cost of goods. Like no seller is going to be sustainable selling something like lower than what it costs to make. So basically, if the miners are basically putting this money, literally like they're spending this money for the electricity and the machines to mine the Bitcoin at that amount of price, so they have to recover it. So this would be the minimum. Otherwise, simply because actually a lot of these miners, if I understand correctly, their operations, they are able to shut it at will or like scale it at will. So they do it, I think, mostly also because the electricity cost. So I'm sure that maybe some of them would be like scaling back when they see like the price is not as much. Some of them, I think they do it anyways because they know they will not sell. So they will continue to mine, but they will only sell at the certain price. So the price will be held at that price because obviously the supply is restricted. So for those who don't know, like for example, Bitcoin, the supply is issued during the mining. So some other coins are pre-mined, but for Bitcoin, the supply increase with each mining operation, successful mining operation. So yeah, it's very interesting approach. So for you, if I understand your strategy right, is that you could be trading some other crypto, but for you, this is the most important indicator.
Yes, yes. So even if you're trading, say, Solana, right, and you think Solana is better than Bitcoin because the fees are less, or better than Ethereum because it's faster and the fees are less, you're still going to be coupled to Bitcoin in that sense because it is, as I said, the mothership, right? This is what controls the whole market. If people are investing, they're investing in Bitcoin for the lower risk. They're investing for, say, Solana for a slightly more risk, but you get more gains, of course. And then you've got like meme coins at the super low end, which have their own edges. But obviously, if crypto is doing badly, then the meme coins are going to be doing badly as well, right?
So are you trading some other coins or just only Bitcoin?
I trade pretty much every coin. I've got a new edge that I found for meme coins and the micro markets. So like the new Solana meme coins and stuff like that, which isn't what people want. People want the 100x, 1000x kind of. I want to find the next SHIB because if I invested $20 here, I'd be a millionaire, right? And that's nice to think about, but it's not really realistic. It's the equivalent of buying a lottery ticket. Yeah, you might win, but you have more chance of your building collapsing or something, right? So yeah.
I mean, even Bitcoin also had this thing. So people think, oh, if the time goes back, I will be investing a lot into Bitcoin. But at that time, nobody, obviously, some people did predict it, but most people were not certain. So yeah, everything, I guess everything is like that. At the beginning, it's like a risk reward thing. So, okay, so you mentioned about the consumption, right? Or the cost to mine Bitcoin. Do you think also the dominance plays a role? Because as you know, like the dominance of Bitcoin have been diminishing. And also, like, do you think that the effect of Bitcoin on other crypto, like in movements, would be reduced? And there is one more thing, a question related to the impact, the relation between Bitcoin and other meme coins, but maybe you can let me know your opinion about that, like about the dominance thing.
Okay, so dominance I find to be kind of a skewed metric. It is good for looking at TA. If you look at the Bitcoin dominance of TA, you could probably predict somewhat of an altcoin run or some small altcoin season. But I believe the dominance over time, and it is slightly relevant now, and it was a lot more relevant in, say, 2018, 2019, right? But as of right now, it is getting less and less relevant because crypto as a whole is a market that's evolving, right? So as the market evolves, there's going to be different niches, different industries that it tackles, and not all of those are going to be against Bitcoin or better than Bitcoin. The dominance previously was, say, Ethereum versus Bitcoin, right? That was the initial one, and then the altcoins that are on Ethereum. That was how it was originally done. So anything that was on Ethereum, if the dominance is going down for Bitcoin, then all of the Ethereum coins will go up, right? But as of right now, you're seeing real estate, you're seeing GameFi, you're seeing all of this other stuff in completely different industries that don't necessarily counter Bitcoin or run in parallel in terms of a utility similar to Bitcoin. So I do think as the market evolves, with AI as well now, right? So as the market evolves, that dominance indicator or that dominance chart will essentially get less and less relevant.
So when you say less and less relevant, you mean that the Bitcoin will maintain its lead, like it will have like it maintain its impact, even though it's has like a diminishing market share?
Yeah, I think to, I guess, dome off crypto as a whole, dominance will slowly go down almost inevitably to almost nothing, where the actual dominance chart will be irrelevant because there'll be so many niches in crypto at that point. A store of value, I know some maxis might get a bit annoyed saying it's a store of value just, right? Because you can do a lot of other things with Bitcoin. But just on a general sense, the store of value, that's just one small part of this massive growing thing of Bitcoin. So you can imagine the relevance of that in terms of a versus scenario just diminishing over time, right?
Yeah, but would Bitcoin then still have like this lead or this impact on the market?
In terms of the mothership kind of theory, I
Yes.
think over time that will diminish as well. As of right now, and I think for the next probably couple cycles, it will be one of the leading factors because everyone watches Bitcoin first. In terms of like a Wall Street investor, like big money, smart money scenario, people do look at Bitcoin first. Oh, Bitcoin just broke resistance. Let's check out the whole crypto market because we know that all the altcoins will also kind of go up as well, right? The indicator of the run.
Yeah, perfect. So how about like the cycles? You mentioned like there is some relations between the obviously the altcoins and or the whole market and Bitcoin. So we see that sometimes the relation is like there is a relation, but there is like some gap or some phases. So let's say, for example, Bitcoin is going up, also going down, and vice versa. Or maybe they are both going up, but maybe at like an interval. There is like some interval. Have you like what's your comment on that, and what is your feedback on that?
Well, I'm a believer that, because I can see this, I trade every day, that if Bitcoin starts pumping, altcoins mid cap and above will generally start pumping. The difference or the discrepancy that you're potentially talking about is like if you get a new GameFi project that's VR and they've already released a game and they're doing really well, but they're a low cap coin. If Bitcoin pumps and the whole market goes up, this coin's going to go up a lot more than the rest of the altcoins because it's a new investment in terms of, and it's got less liquidity, of course, right? And then Bitcoin could go down, but this coin, because it's got so much investor attention, may go down a little bit because of the market makers have coupled that, right? But it will go down less, and then you get that kind of catch up, right? So you will get scenarios like you're saying where Bitcoin does go down and some coins will go up, but as of right now, I would say most of the market will just follow Bitcoin. And the reason for that is, I wouldn't say it's a monopoly, but the market makers, the ones that essentially control all of these coins with their own bots that trade, right, for profit, they will just couple that to Bitcoin because it is the easiest strategy, right? If Bitcoin goes up, your bot on Bitcoin will trade that up, but the same bot will be on a lot of the other altcoins because your clients are those altcoins if you're a market maker, right? So they want the whole market to move together. And then over time, obviously, as new investors come in and new niches and categories throughout crypto kind of thrive, then yeah, you will see these other coins kind of not necessarily decouple, but catch up at least for sure.
So historically, we have seen some retailers follow the strategy of like basically rotating their gains. So they will take profit on Bitcoin and then they put it into altcoins. So you will see sometimes.
This episode is sponsored by DegreeSign.
CoinExams platform was purpose-built by DegreeSign to be one of the best-performing platforms in the crypto space.
DegreeSign is an agency developing web products with a long experience of building products from scratch for maximum performance and stability.
Start today. Just email make@degreesign.com.
After a Bitcoin run, maybe it goes sideways or it goes down slightly, and then altcoins will pump, like, or at least certain altcoins. So do you do this kind of strategies, or how do you take profit in general?
Yeah, that's essentially my strategy right now, right? I'm expecting, yeah, we could potentially come down to 60K here. I mean, it's not out of the realm of possibility that we come down to 43K around these kind of areas in terms of a time slot, with it being the summer, right? But I think over the next year, that we are going to see a massive, massive run for crypto and everything in general. And kind of forgot your question.
Yeah, so I was asking, like, what's your strategy normally? Like, how your profit-taking strategy? Because some sellers or like some traders, they will have selling at at certain intervals, for example. Some others, they have maybe the resistance line, and then after that they take profit directly. So how do you deal with it?
Yeah, so I've been doing this for quite some time in terms of cycles, and as of right now, my strategy is I personally like to keep all of my money in fiat, mostly. Okay, but this time around, I've basically been building up an altcoin portfolio, a significant one this time anyway. Last time I did have one, and I made some pretty decent gains, probably 700%, some of them. But this time is more about any profit I make. Let's say I've got a certain amount of money, and I make 10% on that money. I will take pretty much all of that profit based on the situation I'm in right now. When I first started, it was a different scenario where it's like, okay, well, I need to pay rent, I need to do this, I need to do that, right? But in terms of the trades I take right now, I'll take my profit, and then I will find the coins that I think will do well over the run. And it's not necessarily meme coins or anything like this. I'm looking more at utility. And right now, I think AI in crypto isn't fantastic. I think a lot of it is just a scam, or they've got some database that they're calling AI, or they ask ChatGPT occasionally so they can put a sticker on AI, right? But GameFi on the other side is massive, right? Obviously, there's we made Pac-Man with crypto and buy this coin, and obviously that's trash. That's never going to evolve and grow and scale. But there's other projects such as like Gala Games or something like that, right? Where they are a game studio. They're looking to scale and evolve with the industry, not just crypto, but gaming in general, right? So when you've got projects like that, as an investor or a kind of angel investor perspective, right, you're going to look at that and say, okay, well, yeah, I'm going to put my money there. So when I do make a profitable trade, I'm just pouring money into projects that I do really think will grow with the market. And anything that I don't see lasting more than 3 or 4 years, I don't touch generally.
So for basically you invest whatever you profit instead of parking it in like Bitcoin or something that's more stable.
Yeah,
Okay,
because like I've got enough on the high caps where my risk is low. I'm chilling. I can survive if we have a bear market or whatever, right? But generally, yeah, it's looking for new projects and it's investing.
So what would you say is like your like the proportions, like for example, large caps to smaller caps or to micro caps?
Okay, so in terms of my portfolio, rather than my
Yes.
profit taking and investing, right? My profit taking is usually just going into mid caps, some low caps if they look promising. But generally, my whole portfolio, I would say 20% high caps, 40% mid caps, and then the rest. I mean, you got fiat obviously is the rest of that major percentage, and then I have probably maybe 10%, something like that, where I dabble in the low caps and meme coins as well. But my meme coin strategy isn't as I said, going for the 10x, 100x. It's an edge that I find if a coin is say 2 days old in the meme coin space and it's less than say 10 mil market cap. What I will do if the chart looks good and it's making higher lows, I will essentially bookmark that coin and then wait for it to break the all-time high. And especially if this is on Solana, because the fees are so low, you can essentially make 30% so easily. It's like an 80% win rate across the board there. So as long as you find the coins and there's criteria for that, I would recommend watching some of my videos when I do this, because there is a lot of criteria that needs to be hit. You need a good website. You need a good amount of holders with percentage spreads to be accurate, right? So they're not going to dump on you. And you need non-botted socials, essentially, right? And if you tick all of that criteria and the chart looks good, then yeah, you can find a really easy 30% edge there.
So if I understand correctly from like what you said so far is that you also emphasize a lot on the fundamentals and also like you don't just like only focus on the charts, is it?
Yeah, I mean the fundamentals, of course. I'm a chart guy at heart more than anything. So I've seen hundreds of thousands of charts probably at this point, right? And it's some of it's subconscious, but I try to keep a lot of it conscious, where it's like, okay, this looks like a healthy chart, this looks good, right? It's less of the feeling and more of the, okay, I'm an analyst, know what's happening here, and I know my percentages to win. Similar to kind of a poker style, right? I've got aces here, I've got kings here, and I know this guy isn't necessarily going to beat me most of the time here, so I'll invest this much and manage my risk accordingly, right?
So would you say that most likely like the events that's happening in crypto, like major updates or stuff, that doesn't impact the price as much as like the technical analysis or technical?
I think there's a big misconception where people say that fundamentals are completely separate to analysis in terms of TA. And what I will say there is they work in parallel, okay? You can get a major event and you could just look at the fundamentals and look at the news as it's released or released earlier on X or something like that, right? Where you say, okay, this coin's getting screwed. And then you look at the chart and it started dumping. But you could also do the other way around, right? And obviously take a trade based on that last point, right? But you could also look at it the other way around from a technical analysis standpoint and say, and not even know the news is happening, but you can see the chart dumping, right? If you're just the chart and you're not looking at the news, not looking at the fundamentals, right? And you're just looking at the chart and we've just lost to support or something's just happened on a technical analysis standpoint, you could probably make the same trade with the same profit as a fundamental analyst, right?
Perfect. And it's maybe more predictable as well, because like
Yeah.
you're dealing with numbers rather than the subjective data. So for you, which one, or like what is the blend? Like is it 50-50 or what is the blend there?
In terms of my analysis, I do stick to the chart. It's probably 90% the chart. And the reason for that is there's so much fake news. I hate that word. It's overused now, right? But there's so much media articles out there right now from a crypto perspective that are really just trying to pump a coin or dump a coin, and they might not necessarily be true, right? We had that major Bitcoin dump previously this year, where this was pre-halvening, where literally an analyst at Matrixport said, I think Bitcoin's going to dump, and here's why. And crypto just completely tanked. It completely tanked. And that, for me, is manipulation because Matrixport obviously own a lot of Bitcoin. Their founder owned like a massive market share of the mining, right? So you can kind of, if you look at the fundamentals and you have that kind of sight where you can see the structures of the media companies, yeah, you could probably predict what is true and what is not. But if you trade purely on fundamentals without that extra bit of analysis, where you're saying, okay, what's the structure of this media company? Who owns it? and how could they benefit from that, then yeah, I mean, if you're not doing that, then you could get in a lot of trouble. I mean, we've seen a lot of the JP Morgan articles that come out in previous cycles where they think, and you can plot it on the chart where they're like, oh, Bitcoin's going to zero, and then Bitcoin pumps 40%, right? And they're really just trying to get you to sell some of the time. So I would say if you are looking at fundamental analysis, which isn't a bad thing, I'm not advocating you don't, right? Really look at where the news is coming from and who benefits from that news more than anyone.
So you mentioned that the like for Bitcoin, you are capitalizing a lot on this energy like basically approach or perspective. So obviously it's a chart as well, so it's easy to track. So it might be like it's a blend between the fundamentals and technical analysis because it's a chart. But for other meme coins and other coins, how much do you capitalize on Bitcoin movements when you're doing the trades, but for other coins?
I would say if you're looking to trade other coins, always look at Bitcoin first.
Okay,
Bitcoin.
but then, for example, okay, so another question is like, what other indicators would you do? Like, okay, so you already looked at Bitcoin. What other indicators would you focus on? Is it the RSI or what is your go-to indicator?
I would say structural lines are probably the most important. I have another indicator here. I'll share my screen. Hopefully it doesn't doesn't mess up. But yeah, I'll just show you my trade setup, what I look at, right? So if we are looking at, this is obviously the same chart you can see here, right? You've got hash ribbons, right? So this is my long-term chart, macro chart. And we can see here, we got the structural line, right? So this structural line is super important. It starts from 26K. So I'm looking at this line saying, okay, as long as this line holds, we're pretty much in the clear for this bull run to continue, right? If we lose this line, we have to wait potentially a day for it to be a trap, which we're looking at right now. This is essentially exactly what's happening, right? We've lost this line yesterday. So we're looking, I'm actually in a long right now trying to get this up to about 68.1, something like that, for a retest of this line, because usually when we do break a resistance like this, the edge is that we retest it, right? So looking at this, we can see that the structure's broken, and that's one thing I will always check out when I am looking at any chart. And if you bring up something like, hang on, let me just move this down. You bring up something like Solana, right? You've got exactly the same thing. And this is the same with a lot of charts. So if you can't look at Bitcoin, or if you're too lazy to in some sense, right, you can do the same thing with the altcoins where it's like, okay, where are the structural lines? We've got Solana here, right? The absolute bear market bottoms. This is the absolute structure right now. If the whole market dumps this summer, then we're going to be looking at this structural line for the run. And the reason for that is most crypto runs, or if not all crypto runs, will run in what's called a parabolic fashion, right? So we're looking at this and we're saying, okay, and parabolic, if you don't know what that means, guys, it's basically like this, right? It's this kind of curve up, exponential increase, right? And what you can do with this run, for example, here is this structural line. And just kind of proving my point here, when we lose this structural line, that's where you want to get a bit more cautious. And obviously, the other thing you can probably see on this chart is this weird blue and red caterpillar, right? And this thing is essentially, it's called the bull market barrier. It's not my indicator, but it is a free indicator on TradingView. Essentially, all it means is if we're above, we're in a bull market. So we want this to hold. So first of all, I always look at this in terms of macro. Where are we in terms of macro for Bitcoin? And then if you want to look at altcoins, then you can say, okay, the run is still intact. We're still bullish in terms of a macro sense. Now, with this altcoin, where can I find my entries, right? And then from that point, you can dive into other analysis, such as Quantum Insight and stuff like this, which is an indicator that I've partnered with recently. But yeah, really, really good stuff. Similar to kind of like Market Cipher or something like that, right?
Perfect. So I see that you have it on the daily interval. So is it your go-to is it daily, or do you also use like the 4-hour when you're doing the trades?
So when I start my trading day, it's always the daily first. Start with the higher time frames. Okay, weekly if you can. But that's more, I usually check that out Monday or Sunday, right, to really gauge the next week. But yeah, it's daily, and then you go down to something. I mean, some people like to use the 12-hour. I used to use it quite a lot. I use it less nowadays. So it's, for me anyway, for me personally, it's daily, 4-hour, 1 hour, 15-minute. Right. Some people will be like, 15-minute, are you crazy? That's super low. I know guys that trade profitably on the 1 minute, right? But the 15-minute is really, it's really to gauge price action as it's coming, right? So if you're looking at this, you can still see some fluidity there, which makes it something that could potentially be predictable. If you're trading the 1 minute, it's less predictable because there's less fluidity, right? And that's essentially how I trade. So daily, daily 4 hour, 1 hour, 15 minutes.
And usually, how long is your trades? Like, do you trade like daily trades, or do you have like longer trades?
It can vary. I would say I was checking my stats the other day actually. At the moment, my average trade is roughly 8 hours, something like this, right? But I have trades that are more investment. So I kind of think of it like trading, and then there's investing, right? So I have all my bags for the run, of course. Once we started banging it, you've got to load up, of course. But then there's like the day-by-day trading, which is the more 8 hour thing.
And for you, if I understand correctly, that you mentioned that you prefer fiat. So let's say, for example, if you see the market dumping, you would prefer to pull out into the fiat instead of, like, for example, rotating into some other crypto that's still having pumped.
Okay. Yeah. So the reason for that is purely, again, it's the mothership theory, right? It's if Bitcoin's dumping, most of the, like, if Bitcoin breaks this major run structure, right? And it's like, oh, okay, maybe we could enter the bear market. I don't want to be holding altcoins or investing in altcoins as we enter a bear market or even in a bear market. I like to have all my money in fiat. And that way, if I know the market's going up and certain criteria is being hit, then I can start piling into altcoins and Bitcoin, right? But if the macro is down, I stay in fiat. I want my money there. And the reason for that is because if I am trading in a bear market, I can allocate funds easier, right? I'm more liquid. I can manage my risk easier. If you're holding throughout an entire bear market, there's 2 years where you've made no money, right? Whereas if you're in fiat, then you can invest that accordingly and still make profit.
And do you use DEXs, or is mostly like centralized exchanges?
Centralized mainly. If I'm looking at altcoins under 10 mil for that 30% strategy, right? When we break the all-time high, I will be on DEXs, of course, and they have to be, obviously the criteria is they need to be more than a day old, so you can be sure it's, or less. You can be more sure it's not going to be a rug, right? Of course, there's always rugs.
Actually, it's a very short time frame. I was thinking maybe like 1 week at least or something.
Yeah. 1 week is better for sure. But the 30%, if it's between a day and a week, because if it is a rug, right, it's less likely to hit that all-time high. So you haven't actually entered. You haven't lost anything. But if it isn't a rug, I don't know if I said isn't before, but if it is a rug, then yeah, you haven't hit the criteria to enter yet. But if we break the all-time high, then you can go for 30%.
So you prefer to enter if it's like just a couple of days old or 1 day old, because also the potential, like the risk reward, like it's like even if there is a rug later on, you could be exiting before this happens.
Yeah, exactly. Right. So you get in, you get out, and it's playing the momentum more than anything.
I see. And how do you find these gems? Is it like just on X or Twitter, or there's some other channels that you follow, or news outlet?
Mainly Dex Screener. I will go in there. I'll find new pairs. I will go ones that have increased the most in the last 24 hours, and then I'll scroll down. I'll look at market cap. And I'll say, okay, this one's 100 mil. I'm not touching it. This one's 5 mil. Okay, let's check it out. Okay, this one looks like it's rugging. No, next one, right? So you find the ones between 1 mil and I would say 10 mil. And then, yeah, essentially check the age of that coin and check all the criteria.
So some of these criteria also, like you're checking the tokenomics and all this, or do you focus just on the charts for these trades?
Actually more. So the criteria, I'll explain it down the list, right? So you got the chart, got how old it is, you need a website that looks good. Okay. Obviously, if it's a meme, they look good if they're bad. For some reason. So if it's a funny but bad website, then maybe that's a good criteria. But it's really like, okay, how old is this chart? Do they have a website, socials, Telegram, Twitter, that kind of stuff, right? And how botted are those? And yeah, if it passes all those criteria and it looks good, then I will I won't enter, but I'll wait for the all-time high to break, and then I'll enter for 30%. Not interested in 10x, 100x, all this stuff. It's just too risky, right? A lot of these projects die because they don't have the money. And I've launched a few projects myself, and yeah, I know a lot about how these guys operate behind the scenes. Another criteria, is the holders, right? If you got 10 holders and they all hold 5%, it's probably not a great coin. And the reason for that is they can all dump on you. It's probably held by a group, and they're going to, all right, let's exit now. And they just, they kill the chart, of course.
I see. So maybe you can give us like a little bit of a background on like what kind of projects have you worked on? And also, is it like on a specific chain?
I like to remain anonymous because crypto is just...
Okay, no worries. But maybe which chain is it? Like, do you prefer like, or do you see the potential of launching new projects on it? Is it Solana or?
Done Ethereum before, and that coin did pretty well. We got to something like, I think it was 60 mil, something like this. It might have been 100 mil. I can't remember. That was years ago. But yeah, so right now, Solana, I'm not really, I'm currently working on a launch pad. I can't say the name as of just yet because there's quite some big people behind it and I don't want to mess up anything, right? I'm not NDA'd, but I'd rather be careful. And Yeah, I'm working more on Solana right now, and we are targeting base as well. But this is a launch pad, so we're going to be on most chains.
So would you say that Solana is maybe taking a lot of a bigger share from this ecosystem, like for example, from compared to BNB chain from Binance?
Yeah, I would say compared to last run for sure. I would say last run BNB was the chain. It was basically Solana this run, right? A lot of meme coins, a lot of NFTs, all on this chain. Unfortunately, most of them didn't work out, right? But I would say this time around Solana is looking really promising. The one thing I'd say about Solana is it does go down a fair bit, right? I'm not sure why that is. I haven't really looked into it, but it's something that does worry me, because if you're trying to be decentralized and you've got this chain, this huge ecosystem that's growing, and Solana, in answer to your question, is the one right now. It's massive. Obviously, base is coming up as well, but I would say Solana is the absolute one if you're looking, particularly for that meme coin edge, right? Solana is the one for sure.
Also, when you choose coins to invest in or trade, do you consider like those having unlimited supply compared to those have limited supply, or is this a factor in your consideration?
Yeah, for sure. Some of the time it doesn't matter because we're only going for that 30%, right? So, but yeah, obviously a limited supply. I don't like tax. Okay, I don't like the burn features that a lot of these guys have. Can be bullish for some people, but for me, in terms of a hold anyway, it's not something I'm too interested in. In terms of holding, I will look at the low caps that are already established, right? 100 mil plus kind of thing. But in terms of the micros, the super, like the meme coins, I look at distribution more than anything, right? If their top 10 holders have less than 1%, it's great. Okay. But I'm also aware that a lot of these guys just snipe up the whole supply anyway. Like Pepe, for example, they did that. They still hold a massive amount. A lot of people don't know this, but they hold a lot of the supply. They could kill that coin at any time.
Distribute it basically on a few more wallets. So it looks like they are holding less.
Yeah. And these market makers as well, what they'll do, it's actually part of their packages where they say, yeah, we've got 200 wallets. If you work with us and pay us this money, we'll snipe your whole supply on these 200 wallets. No one will ever know. Right? It's pretty disgusting, but that's kind of the way it is. And the criteria is still the same, unfortunately, because there's no really real way to track that or check. It is what it is. And at the moment, I would say it's more of a benefit because the coin is going to do well, and that 30% edge is still viable, even if they do hold the whole supply, because they're looking to exit probably 100 mil, right? This is why I say get in, get out very quickly with these meme coins for sure.
And do you trade any NFTs or just focus on the coins?
I looked. I mean, obviously, last run was the real run for NFTs. For me this time around, it hasn't really caught my eye. I do believe NFTs will be a massive, big part of the future when we do see AI and we do see GameFi really merge. When we do get these big worlds, think like Ready Player One, VR, this kind of stuff. I do think NFTs will play a massive role in that. It just depends if Tencent or if these big companies get there first and they say, all right, well, we don't need NFTs. We've got our own databases. You work on our system, right? But I do think NFTs, I haven't, in answer to your question, no, I haven't really touched them much this time around, just because how a lot of them ended last run. I've got a lot of friends that got seriously burnt. I'm like talking like 90% of their portfolio because they dove too far into NFTs. I think NFTs have a massive use case, but I do believe that in terms of a quick investment or a trade or a flip, I think it's incredibly risky, and it's something that doesn't interest me too much.
Perfect. Thank you so much for the overview and sharing like your insight and perspective. So how can people reach you or find you other than your YouTube channel?
So I got YouTube. I'm also on TradingView. Just type in Hamilton_Gilpin, and I've got a bunch of free indicators on there that you can use, and also on X as well. And yeah, mainly YouTube. Just leave me a comment, and
Perfect.
I'll
We'll share those below. Thank you so much for your time, and have a nice day. Bye.
All right, cheers, man. Subscribe, guys.